It's been bracing for it, and now it may actually be embracing it. The idea being that let's just get it over with. If we're going to have a recession, let's do it. Let's kind of clean out the excesses and start all over again. The market tends to look ahead by 6 months, and I think it's done a pretty good job over the past 6 months of anticipating this significant slowdown in the economy with some elements of a recession going on. And now I think the market's starting to look ahead into next year, and that could very well be a recovery year from whatever this recessionary environment turns out to be. You know, we're all kind of doing a Hamlet recession, to be or not to be. I'm kind of thinking that there's going to be a mild recession.
So a mild recession, in real terms, obviously, we still do have nominal growth that's pretty high because of inflation being where it is. But what do you actually expect in terms of, let's say, second quarter GDP? And is that going to be the end of the contraction, do you think?
Well, I'll go with the Atlanta Fed's tracking model, which currently is seeing a 2% annualized decline in real GDP. And I think we could have a similar decline in the second half of the year. It looks as though the consumers are very depressed about inflation. They've realized that prices are going up as fast as wages, in some instances faster than wages. And so that's been depressing, and it's meant that their purchasing power has been eroded by inflation. I do think that inflation is going to be moderating, but it's going to take some time this year to next year. And I think in the interim, we're also going to continue to have what certainly looks like a housing recession. That's been one of the biggest weaknesses in the economy in the second quarter. And then I'm also seeing some signs of capital spending is slowing down.
Yeah, I mean, it's certainly the case that the market is always itchy to look ahead to the next
Correct.
turn. I just wonder, is it almost, too cute that it gets to this moment where, okay, guess what? We've been in a recession for 2 quarters, and that's the worst it gets. We don't have to live through the earnings downgrades. And by the way, the Fed's going to also become maybe less hawkish because of what's already gone on in the markets.
Yeah, I think some of that is wishful thinking. Some of it is a possibility. But I think the Fed is still committed to and has to increase the Fed funds rate in this month, at the end of the month, by 75 basis points. And I think they're still going to go ahead and do 75 basis points in September. Remember, the Fed keeps repeating that they want to get inflation down to 2%. So even if it moderates down to, let's say, 4 to 5%, they're still going to be under pressure to deliver on tighter monetary policy. And of course, that could weaken the economy, and a weaker economy could bring inflation down. But it's not going to bring it down to 2% anytime soon, which is what they keep talking about.